Well, it happened again. Back to back 6% crashes on the S&P 500. It's just absolutely insane. If you can't really imagine how bad that is a total loss of $5 trillion for the US stock market in just 2 days. 2 days, that's right. And today, I'm going to be explaining what is causing all of this and what it means for your money. And even if you're not invested in the stock market, you should still watch this video as you will learn some cool things today. Trust me. Let's get right into it. Well, here it is. This is the stock screener for the day. This is not a pleasant stock screener by any means. As you can see, everything is red. There's like 5 green stocks in this area right here. Everything else is bloody red. And this chart is looking like a big pool of blood. And it really is. It really is. The S&P 500 was down 6% today. I mean, what is going on? This is absolutely wild, and we haven't seen this since COVID. And COVID was 5 years ago. Time flies, doesn't it? Yeah, well, this is the second 6% decline in a row. We had one yesterday, and if you missed it, make sure to watch my previous video. I covered it more in detail, especially the tariffs, which we'll get to in just a second. But as you can see, we're now down 8% for the week, and we're down 10% from April 2nd, which was when Trump announced his tariffs. So clearly the market is not having a positive reaction at all, and we are now down 13% year to date on the S&P 500, which is just a complete disaster. And we actually erased most of 2024, as you can see. We are pretty much at a 52-week low. We are about maybe 3 to 5% off, or maybe even less. Yeah, more like 2% off of a 52-week low on the S&P 500. And actually, we are trading at levels that we saw all the way back in February of 2024. As you can see, we were trading kind of in this low 5,000s range, and all right, we're right back there. After being at 6,000 for the longest time, we are skipping past 5,000. We're going right back to 4,000. And look, this is not good at all. And it might not seem good at all. And I mean, it's not. But there is some merit to this, and there is some hope that I can give, which we will get to later in this video. So make sure you watch till the end. But anyway, the NASDAQ was down almost 6% as well, and the Dow was down 5.5%. All 3 indices had their worst day since March of 2020. March of 2020 was the peak of the COVID crisis, and that was not a fun time. And actually, I just want to show a screenshot from March 16th, 2020. Here it is. This looks familiar? Well, this was the stock market on March 16, 2020. As you can see, everything is down by like 10%. And the S&P 500 on this day went down, I believe it was 12%. So, I mean, it's just insane. And we haven't gotten anything close to this really for the past 5 years. And today we are finally seeing one of these really, really bad days. Now, this right here is a website that shows us how each company in the S&P 500 performed. And as you can see, there are only 14 green stocks out of 500. That is such a low number. Everything else is red, and red by a lot. I mean, you can see for yourself, most of these stocks are down between 5 to 10%, some of them even down in double digits. I mean, yeah, it's just not great at all. Now, don't worry, we are going to get into how you should approach this crash and what you could do in this situation, but real quick, I do just want to mention pretty much the only thing that went up today, and it's not great. It is the VIX. If you don't know what this is the volatility implied index, and basically what that means is it measures the level of volatility in the stock market. The higher the VIX, the more volatility. And as you can see, volatility is pretty much at an all-time high. Well, not an all-time high, but at least a high level. And you never really see indices move this much. And that's why the VIX was up 50% today. It's up to 45. And if we just look at the max chart for the VIX, we've only seen this level twice before for an extended period of time. And this was obviously during COVID right here, where the VIX spiked all the way up to around 80 at the peak. And then we have the 2008 global financial crisis. And that was not a fun time, to say the least. The S&P 500 dropped by 50% during that time. And obviously 50% declines are no fun. And we are at the highest level of the VIX since COVID, excluding this one day that happened in 2024, which was August 5th. Basically, to keep it short, I'm not going to go into detail, but this is what we call the Japanese yen carry trade crash. And to explain that as if you are a 5-year-old, I'm just going to say that basically Japan raised their interest rates, and borrowing the yen became more expensive, and basically just caused a whole lot of panic. But really, it was all over nothing, and ultimately everything ended up being fine, and the stock market very quickly recovered. That was when we had a 10% correction in 2024. It was a very brief 10% correction. We instantly recovered, as I just said, and yeah, so we can really ignore this. So other than that, we haven't seen VIX this high since COVID. As you can see right here, in April of 2020, the VIX was still above 40, and that was right after the peak of the COVID crisis. The VIX was obviously still inflated, and as we kind of recovered in the stock market, the VIX ended up collapsing back to normal levels. And it was at normal levels for a long time ever since, and now we are finally seeing these crazy VIX levels. And the word of the day, of course, is tariffs. And we've talked a lot about tariffs on this channel. If you haven't seen my other videos on the crash, you can go watch them. I go into tariffs more in depth, but just to briefly summarize what happened, Trump put reciprocal tariffs on many different countries, which include China and Vietnam and the European Union and something like Cambodia, just a bunch of random countries. But the problem is that the tariffs he put were so high that people just weren't expecting it, quite frankly. And that's why we're seeing this reaction from the stock market, because the stock market, it doesn't like uncertainty, and that's probably the number one thing it doesn't like. And when we have uncertainty, you see days like these where the VIX is up 50% and the S&P is down 6%. It's worst day since COVID. And yeah, nobody was expecting him to put 50% tariffs on China, 50% on Vietnam, like 30% on Taiwan. I mean, it's really crazy out there. And I do think he's going to change them. A lot of people have come out and said that if these tariffs stay, then obviously it's not going to be great for not just the U.S. economy, but also the world in general, because we're going to get into all these trade wars, and it's going to be a complete mess. But yeah, if we could avoid all of that, it would be nice. So hopefully over the weekend, we'll see if Trump can kind of make a deal with some of these countries, especially China. And China actually did retaliate today. Speaking of China, they put 34% tariffs on us, to fight back against the 54% that we put against them. Just to be clear, we put a extra 34% on top of a 20% tariff that we already had on them, which Trump put in pretty much as soon as he got into the office. So if you see that chart that I showed off yesterday, it does say we put 34% on China, but we really put 54%. But anyway, China put 34% on us. That's why the market is reacting like this, because these are the signs of the early signs of a trade war. And this is actually kind of similar to what happened in 2018. If we zoom out on the S&P 500 charts, you can kind of see this dip in 2018. This was when Trump first started his trade war in his first term, and this was also against China. And the S&P dipped around 15%, and it ended up recovering very quickly. And it's because Trump was able to stop the trade war and make a deal with China, and everything ended up being fine, and the economy was back to booming and everything. So, yeah, if he manages to do the same thing, we could see some sort of reversal here because, I mean, S&P 500 at a 52-week low. That's no joke. That is, like, if we go down any lower than this, we're not only going to be below 5,000, but we're going to officially erase the whole gain that we made in 2024. And keep in mind, 2024 was an amazing year. The S&P returns 22% or something like that. It was 25% at its peak. And yeah, it was just an incredible year. And the fact that we just lost it all in about, well, most of it comes from these past 2 days, but really since February 19th, that's when Trump first kind of started giving us fears about tariffs. Um, we've just not been doing great. Now, another thing that happened today that I do want to talk about is we did have Jerome Powell speaking. He's the main guy at the Fed, and he's going to announce his interest rates decision in, oh, it's not that soon, but in about a month, he's going to announce what he's going to be doing with rates. Now, a rate cut is generally good for the stock market, and we might not be seeing a rate cut, and I'm going to explain why. So, Jerome Powell, J Powell for sure, basically he said that that Trump is being silly right now with all these tariffs, and Trump's plan, he wants the Fed to cut interest rates. He's openly said this before. He even reposted like a TikTok earlier today, or maybe it was yesterday, on his Truth Social, and he basically said publicly that he needs interest rates to come down. But JPOW today, he said basically, I don't care what Trump says. We at the Fed, we're gonna kind of do the right thing. We're not gonna get involved politically. And JPOW did say that these Trump tariffs are gonna cause so much uncertainty, and it could lead to a rise in inflation. And that was what really spooked the markets, and that's why we actually continued to sell off during the day. Um, there was this is where JPOW started speaking. As you can see, there were some signs of a potential reversal, but about right here, he announced the inflation fear, and we obviously continued to sell off for the rest of the day. And yeah, this is not good. When you have the Fed saying that they expect more inflation, when JPOW has clearly been saying that inflation has been coming down towards their 2% goal, um, that is a problem. And Trump is going to have to do something about this, because if he doesn't, then I think we really are going to see more pain in the stock market. And we do have a couple days over the weekend to kind of reflect on everything that happened, because it's obviously been an absolutely crazy week in the stock market. Definitely the craziest week of 2025 so far. And it all comes down to Trump's policies, and we'll see what he kind of gives us over these next couple days. And depending on what he does over the weekend, if he could get some deals done, then on Monday we could definitely see a nice bounce. Even if we go up like 3%, which is already an exceptional day, that is pretty much nothing in the grand scheme of things compared to how much we've sold off. So potentially we could see even a bigger bounce if he manages to either, like, if he cancels the tariffs, or if he gets a deal done with China and they come to a mutual agreement, then obviously the selling off could stop. But otherwise, I don't see why it wouldn't continue. And that leads me to my next point. Um, so there was this day in 1987. It is regarded as Black Monday. And basically on that day, the S&P dropped by 20% in one day. And the way it happened, um, basically the S&P 500 had the week before, it was really not a great week, and I think it lost about 10%. And actually this week we are down um, almost 10%. Well, from April 2nd, we are down exactly 10%. And basically, uh, on the next Monday, when people kind of thought that selling was over, it basically just continued. Like whatever economic fears were going on back then, I'm not gonna get into details because otherwise this video would be way too long. But on Monday, the sell-off just continued, and everyone was selling their stocks. And at some points, there's this phase in the market where people just don't care about what price the stocks are at anymore. They'll just sell it anyway because that's just a part of the stock market. And usually when it gets to that point, it marks a bottom. But it's, I mean, it's not guaranteed, obviously, but right now we are at a point where I feel like people are just selling stocks like just for the sake of selling them. And we're seeing this with a lot of companies. There are a lot of great companies right now that are trading at insanely cheap valuations. And I can't get into every single one individually, although I wish I could, because there are a lot of great companies on complete discount right now, trading at very cheap levels. They are down like 50-60% from their highs. And yeah, I mean, it's just crazy that people are selling them at these low levels. And if you actually don't know, back in 2022, when there was a bear market, uh, let's take Meta as an example. Meta actually fell all the way from about $400 all the way down to 80, and people are still selling at 80. And guess where it's at right now? Well, it's at about 500, and at the peak it was 700. So if you just bought the dip, if you remained calm, if you held on to your shares, you would have done completely fine in the long term. And I feel like that's going to be the case here because obviously every time we get one of these crashes, we always reverse. And this has been historically true. Sometimes it takes longer, like in 2008, or sometimes it just kind of happens right away, like with COVID. And I don't know what's going to happen this time. That's kind of the beauty of the stock market. Nobody knows what's going to happen. But there are a lot of signs that points to a bottom here. But ultimately, like I've been saying, it all comes down to Trump and what he manages to do with these tariffs. And these tariffs, well, if he keeps them the same, the panic could continue. I'm not saying it will. I do think that at some points the selling will stop. But if Trump obviously does something great over the weekend, then maybe that would be a better reason for the selling to stop, and maybe we could actually rally and quickly get back to at least some of the highs we saw. Like maybe if we could get SPY back to 5,500, that'd be around an 8% pump. I feel like we could do that in about a week. Because in COVID we actually recovered. I believe there was like a 15% week for the S&P, because when we realized that COVID wasn't as big of a deal as we thought it was, and when the government started printing money and everything, that's a whole nother story. But yeah, that's what we have in terms of tariffs right now. Now, another thing that's going on is we're actually seeing a lot of analysts on Wall Street coming out and saying that they're bearish now. One of the most bullish analysts on Wall Street, Dan Ives, actually just came out today and said that he thinks what Trump is doing is just ridiculous. And he was saying that he's been bullish for 25 years, and now for the first time he is bearish on the stock market. And I feel like when someone who's been bullish his whole life on tech, and tech especially, but the whole stock market in general, when they become bearish, I feel like that kind of has to be a bottom, the stock market, because I mean, really we can't really go much lower, can we? We are down, just to be clear, we are down 17% from all-time highs on the S&P 500. which means we are about 2 or 3% away from a bear market. Bear market just means that we are down 20% from the all-time high. And the NASDAQ is actually in a bear market as of today's close, which is pretty incredible because the last time we had a bear market was 2022, and that was a whole 3 years ago. So it looks like we're doing this again. And well, usually bear markets, they usually go up to 25%, but then they kind of just die out and we kind of get some bullish sentiment back into the markets at that point. But there are some rare cases where we go kind of below that 25-30% level. And that's obviously what happened in 2008. That's what happened in 1987. And obviously the Great Depression in 1928. But I personally think that what we're dealing with right now is nothing close to that. Obviously, we could have like a recession. That's probably worst case scenario. But I feel like we're pricing in something terrible right now that just has a very low percent chance of happening. Obviously, it could happen. I'm not saying that Trump's method right now is foolproof. There are some potential flaws that could go wrong, but ultimately, like it's not. I don't think at least it's the end of the world what he's trying to do, and it's definitely not as bad as something like 2008 or the Great Depression, where we had real issues that kind of that just worsened the economy in a dramatic way. And right now we don't really have that yet. And I don't think we'll have that at all, because I don't think Trump will let the economy just collapse, because obviously Trump is kind of, well, he's kind of the border president, but he's also huge on the economy and the stock market. So I don't think he's gonna let the stock market crash under him. At some point, he's gonna come in and say something that will perhaps change market sentiment, and that could be soon. Who knows? It could be this weekend. It could be tomorrow, or it could be in a month. You never really know. But yeah, I think it'll be really interesting to kind of see where we go from here, because I don't think anyone really was expecting this to start off the year. Down 13% on the S&P. That is a serious thing to be looking at, and I guess we'll kind of see if this downtrend can continue or if we do get that reversal. And that's going to do for this video. I appreciate you if you made it to the end. If you want more market updates during tough times like these, you could subscribe. It's free. And I'll keep you guys updated on everything. And I'll be back here tomorrow. I'm going to be explaining what the Trump plan is. So if you're interested in that, make sure to tune back in here tomorrow. And yeah, I'll see you next time.